Hi everyone, welcome to this live coverage. As usual, it's a pleasure to be here with you to guide you to a macroeconomic event. I'm here with Yohay Elam from Forex Crunch. Hi Yohay, how are you?
Hi Valeria, doing great. Looking for action.
Yeah, me too.
How are you?
Hopefully we get some this week. Has started in slow motion, right?
Yeah, it was a long weekend in the United States, so I expected people to come back with more energy, but well, maybe the big events are ahead of us.
Yeah, I was thinking more of the upcoming payroll on Friday probably being a bigger event than today's revision of GDP. As you know, guys, today we are having the first revision or the second reading of the third quarter GDP in the US. So it's actually not a big market mover, although, of course, if there's a deviation between the actual consensus and the final reading we're going to get in a couple of minutes, then, well, yeah, things could get a bit more interesting in the Forex market, right?
Yeah.
Yeah.
We're expecting only a small change from 2.9 to 3%. These figures are annualized. That means it's not quarter-to-quarter growth, but multiplied by 4, basically. It's only a small change expected. The previous 3 quarters were bad. Talking about the last quarter of 2015, first and second quarters of 2016 were just around 1%, 1.4, quite poor, and we finally had a rebound in Q3, which is also expected to continue in Q4. So average growth remains more or less the same, 2.5%, since the beginning of the recovery, which began way back in 2009. So things are still moving slow. It's the new normal, the new mediocre. At least now, this quarter is supposed to be a bit better.
Yeah. Anyway, all we are getting lately, all this data, despite, as you said, mediocrity, it's somehow telling us that the Fed is going to rise rates anyway, right? On December, at least that's what the market believes.
Yeah, I think now it's basically 100% chance for a rate hike. We had good figures, and we also had Yelen's testimony recently, which she gave us a very thick hint that they're going to raise rates relatively soon. And that was also sort of confirmed in the meeting minutes, and all signs point to a second rate hike within a year. Afterwards, it depends a lot on fiscal policy. It depends a lot on President Trump. Some expect more rate hikes than beforehand because of fiscal stimulus, higher government spending, higher inflation. But it's still early days. I think we don't really know what he's going to do and what's going to be approved in Congress. And of course, the global economy also matters.
Yeah, I was following the euro a few minutes ago because I was watching that German inflation was a bit of a disappointment, right? The harmonized figures, the one which match the European Union ones, came really, there was not inflation, in fact, in November, and sending the yearly one down below expected, and the euro it's back under pressure, right? And unable to rally beyond 106. So I was watching this kind of bullish setups that's basing on the pair holding about 550, right? To be honest, I don't have much faith on that possible bounce, particularly if we have strong data today and probably strong data next Friday when it comes to employment. What do you think?
It shouldn't have that much of an impact.
Today.
Regarding inflation in the Eurozone, we did have a poor read from Germany, but the one from Spain came out a bit above expectations. But basically what's going on in Europe is very poor inflation. If Draghi needs excuses to keep on buying bonds, he has it from inflation figures. And with this bond sell-off that we had earlier in the month after Trump was elected, which first and foremost came in the United States, but was also seen elsewhere, there are just now more eligible bonds to buy, so his work is easier. Of course, he's keeping the cards close to his chest. But again, more rate hikes in the US and probably more easing in the Eurozone, monetary policy divergence. That means the bias, the trend remains to the downside, but hopefully we'll see more trend trading and not euro dollar stuck in range, because this year we had long days, long months even of
Yeah,
absolutely no movement.
I was thinking that I do agree with you in the fact that the divergences between central banks are quite relevant and are becoming even more notorious. But I also believe that that's something the market knew for very long already, right? Meaning that the Fed has been menacing to rates, I don't know, for a year, 2 years, whatever. And we all know that the ECB is in slow motion, are reacting to the poor readings and extending stimulus, even against its own, because you know that they don't really want to add much more stimulus, but there's the only thing they can do this time. So, bottom line, what I'm trying to say is that the divergence between central banks is present. Of course, it's a factor, but I do believe that the euro is being hit harder by all the political woes that are going on in Europe. Brexit is one, Italian upcoming referendum, and the possibility of Prime Minister Matteo Renzi quitting, right? Resigning, in fact. I believe that he managed to resign if the yes campaign wins, or the no, I'm not sure. But anyway, there's a big possibility that he can resign, and the already fragile Italian banking systems will probably collapse if he does, and that will drag the rest of the European banking sector lower, right? So that's a higher risk for me for the euro actually than the ECB itself. Brexit, Greece is going on in trouble. We forgot about Brexit, but we shouldn't forget about Greece because the country is really in trouble. Really, I mean it, right?
Yeah, I mean, so far the UK economy is doing okay, but we know that this will probably not last for too long, because as long as uncertainty continues, investment decisions or people, if they decide to move to the UK or out of the UK, everything related to trade is a bit more limited, so the prospects are lower. And it's also relevant for Europe. The UK is a big country. It leaves the European Union if there's danger to trade. It weighs on the economy, and if it also on politics. I mean, the victory of Donald Trump and Brexit, the bigger fear, apart from Italy this weekend, is the French presidential elections. There's one very strong candidate, Marine Le Pen of the right, which
Yeah.
calls for Frexit. So I don't see Italy leaving the Eurozone on its own, but sorry.
Oh my God, I didn't know that one. There are so many exits going on. Anyway, as I said a couple of months ago, I was thinking that Brexit was going to be the beginning of the end of the euro area, and it resulted that Brexit was it. Faith in the ability of the European Union remaining together at this point has decreased a lot. And of course, that will mean a collapse in the common currency, right? Below 80 cents, which was its historical low.
Yeah, in 2002, I think, or yeah.
Yes, in the early years after it was
Launched.
introduced. Sorry, I didn't find the right word. Anyway, what's your take on the pound?
The pound, well, it's been relatively stable. I mean, looking at the euro and the yen after Trump,
Yeah,
we've seen the pound relatively stable. One of the reasons that it managed to weather the storm is that we had this Super Thursday just before the US elections, and the big events there were that the High Court ruled that Parliament must vote on Brexit, and the Bank of England turned from dovish to neutral. So
yeah,
there isn't the same monetary policy divergence that we have in the dovish ECB and the dovish Bank of Japan against the hawkish Fed. I mean, very generalizing everything. The Bank of England is somewhere in the middle, so I think pound dollar is looking for a new direction. basically trading sideways. Lines I'm looking at 123.80, 123 to the downside, and to the top side 126.70.
Yeah, I was following the daily chart because not yesterday, but the previous Monday, the pair traded between 123 and 125.10 or so. Ever since then, it has been contained within that range. The pair has a spike a couple of pips higher yesterday, but that was it, not much more. Uh, anyway, we are just 1 minute away from the release. Uh, So let's wait as usual. Remember that you will have a bit of delay on our comments, right? You will see the reaction first in your charts, of course. But anyway, we are expecting a modest
Yeah,
movement in the
very
market
soon.
unless we have a huge deviation in the final figure.
3.2, a bit above expectations. And the dollar is a bit stronger, partially.
3.2, yeah, that's a good number. That's a nice number. The euro is doing fresh lows, but a couple of pips. The dollar Japanese yen is the one reacting sharply, regaining the 113 region and with strength. And the euro is approaching to that 550, 560 support region where it has been bottoming intraday this last days. I do believe that the market is taking any excuse to resume the dollar buying these days.
Yeah.
The momentum is not yet over. I was watching that the euro dollar recovery was really shallow, and therefore I have little hopes for an upward moving year. The pound is quite neutral to
Yeah,
reading.
like the Bank of England.
Yeah, gold is under pressure after the news. Yeah,
Not such a big surprise, and so far not such a big move. Maybe dollar yen, as you mentioned, has the strongest move. Already moved quite a bit earlier today.
yeah. I guess the market already reacted. Anyway, we have a still pending of release a couple of Fed speakers, right? Later today, and I'm watching that core personal consumption expenditures came in below expected, but matching previous month readings. Gross domestic product price index plunged, fell, not plunged, fell. There's overall, I believe that the dollar it's as I said, the market is looking for an excuse to buy the greenback, and it's getting in from this report. Fresh heights for the dollar yen, first low for the euro dollar.
We've seen the dollar take a few breathers, make a few corrections. So far, they haven't. I mean, it's necessary market reaction, typical, but the trend is the trend is the dollar. Make
Yeah,
the trend your friend.
yeah. I know it's a bit of a stretch, but this last 3 4 days correction or consolidation across the board has helped, uh, has encouraged, I do believe, dollar bulls. What are your levels in the dollar Japanese yen?
Dollar yen. Currently, we're at 113.30. We reached highs of about 113.80 is a line I marked here on the charts. I think
Yeah,
that was the bottom in the past. I mean, you look back because these are levels. I mean, peaks we've seen last time. Back in March, we reached this level, more or
yeah,
less. 113.80, and above that, I would say 116, which used to be at the beginning of the year, way back, sort of a line in the sand for the Bank of Japan, and then it was the bottom again. I'll add the line on the chart. So that's the next level, big level, I guess.
If you know, I know this is a huge chart, right? I mean, it's a monthly chart, but if you take in dollar Japanese coin, right, the rally between the 2011 low and the 2015 high, right? Uh, you will see that the pair found support around the 50% retracement, broke above the 38, and in fact around 14, a couple of pips, uh, just right below where the price stalled, we have the 23.6 retracement of such a rally. So I do agree with you that break through this level can take us easily up to 16 something, where we have also some really relevant uh, monthly lows. Sorry. But yeah, I'm watching for a break of 14 to think about a stronger recovery in the dollar Japanese yen.
Yeah. Just look at the monthly chart, give me an opportunity to realize how strong the
Yeah, the movement
post-elections
has
rally.
been, right? Yeah. It's not that I like to trade or watch much in the bigger time frames like that, those one, but when you see the pair reaching some huge Fibonacci retracement like those ones and recovering, and how conscious, as you said, of how much the pair has moved within the month or the last few months, it's quite relevant, quite interesting to watch.
Yep. Also, this week we have the OPEC meeting. It's tomorrow,
Oh, that
Thursday.
will be fun.
Yeah, an enormous amount of rumors, deal or no deal. It's basically Saudi Arabia against Iran and Iraq.
Yeah.
Saudi Arabia wants them to cut. They don't want to. Um, do you think we'll have a deal?
No, I do believe they won't. They don't. They're not going to have an agreement because then they had some discussions yesterday, Monday, right?
Yeah.
And they didn't get to uh, an arrangement. So, indeed, uh, I don't expect much from tomorrow's meeting. Anyway, this is the daily chart for crude oil, and in fact, is that the fact is that since early August, the commodity has been trading within 42 and 52. It's like a comfort zone we have achieved. In fact, if we dismiss this movement towards downside, it has been contained above 42 for already since May, right? So I do believe that there's a good chance that if they don't have an agreement tomorrow, we can go down to that 42, 42.50 region, which is the base of the range. And if somehow the price breaks lower, we can go down to the 40 region. But to be honest, I'm not seeing that $25 barrel level again.
Yeah, that was an extreme. Mm,
Yeah, I can't see it right now. I can't. It's too far away.
yeah, I would say the next level is 39, where
Yeah,
we've been late August. And from there, it'll be tricky ground. Anyway, if there is a deal, it'll be interesting to see if we break above this double top of just around $52.
yeah,
Um, in the longer term, I think the flexibility of the U.S. shale industry means that if prices go up, production there goes up relatively quickly, pushing prices back down. And on the other hand, if prices go down too much, they squeeze their production quite
yeah,
quickly. And so there is some kind of a pendulum swing, which works relatively fast in oil terms. Uh, so we've seen production there in the United States rise and fall in
yeah.
the past few years.
Anyway, the question is how OPEC meeting tomorrow and probable outcome will affect currencies, right? And if they don't come to the end, that will mean that crude will fall, and that will help strengthen an already strong dollar, right?
Yeah. I mean, since the elections, we didn't have such a good correlation between oil and the dollar because we had oil waiting for an OPEC decision and the dollar just rallying on its own, each one to its own. But I guess these correlations will, I mean, the inverse correlation between the dollar and oil could return now that elections are behind us and the inauguration is only in January, and OPEC, after OPEC will be behind us, I believe we'll get, sorry?
But then we'll have the Fed. It's always something in the way.
Yeah,
Right?
yeah, Fed, yeah, in 2 weeks.
Yeah, I'm not sure about the exact date, but will be around the same.
Yeah, December 14th. It's a Wednesday, and
Yeah, probably then and Thompson. We're going to have some fun then. I do believe that market will see sharp reactions there that can extend until year end, of course.
yeah, big question for the Fed is what will they tell us about 2017? Will they
Yeah,
continue raising rates or faster because of Trump? Or they don't know because nobody knows?
gold is pressuring the 1118, 80, sorry, region, so that will probably keep the dollar on demand during the upcoming hours.
Mm-hmm.
What about commodity currencies?
Well, Canadian dollar is waiting for the OPEC decision. Lots
Mm.
of moves over there. Domestic data as well. We have GDP in Canada tomorrow. We have the jobs report in Canada. So quite busy. Um, if Trump is good for the US economy, then it's also good for Canada because there's the Canadian economy depends on demand from the United States. Lines I'm watching 133.80, 134.80, and more importantly 135.60. But it's a bit choppy.
Yeah. Or to find 88, I have that high, so that's a level to
Right.
watch, right? The Aussie, I'm following, there's strong static support resistance level around 74.15. And once it broke below it, it has fallen pretty much straight down to 73, but then began to recovery. So I do believe that the bearish risk in here persists. And if somehow we lost today's low around 74.30, there's room for another test of that 73 region during the next few sessions. I don't know. So the market seems to be reluctant to sell the Aussie. Part of the latest recovery has been due to rising commodity prices, iron ore, copper. Copper, both commodities are record heights, compliments to Donald Trump's infrastructure investment promises, right?
Yeah, and also China, I think, is picking up some steam. So, but yeah, mostly on hopes for these big projects from Trump. But it's important to remind everybody that, like any politician, there's a difference between things that a politician says on the campaign trail and reality.
Uh-huh.
So,
Tell me about it. We had elections 1 year ago in here.
yeah, it was a big change.
Yeah, December 10, right? So it's, yeah, pretty much a year. One of the biggest promises was to take down a tax that workers pay with their salary. It's a huge tax, and it was a law made as an emergency law for 10 years back in 1985 or something like that. Every 10 years we have it back, and it was a huge campaign promised to remove that tax. And yeah, well, here we are. The year is coming to an end. The Congress is about to shut down for holidays, right? They are not working summer here, which is January and February. Uh, and the tax is there, and they did not discuss it. They are discussing it today, these days. And maybe in March, they have a reduction of the tax, but maybe a reduction, nothing about removing it.
Yeah.
Things that
Yeah.
happen everywhere around the world.
Yeah. I think that with Trump, he promised to do a lot of things on day one, on January 20th.
Yeah.
But we shouldn't expect anything, of course, on day one because it's only one day. But
Yeah.
there's sort of this common rule of thumb of 100 days.
Yeah.
Things you can do a lot in the first 100 days. You have all the political backing, the mandate from the people. That makes sense. So I guess around the end of April, after about 3 months, we'll know a bit better if Trump
Which
delivered.
yeah. Which policies he will actually apply, right? Leaving the Trans-Pacific Agreement, building a wall with Mexico, and all that.
Yeah,
Yeah.
deporting illegal immigrants, lowering taxes, and spending a lot on infrastructure, and keeping all the Medicaid. Yeah, it seems a bit like a fantasy, but well.
Yeah. Anyway, the dollar is retreating part of its gains, although the dollar yet again it's holding near its highs and gold around its lows, suggesting that stocks may open higher today because the yen and gold, are clear indicators of risk sentiment, right? If they are both falling, means the market is a bit more risk appetite today. It favors more risk appetite and risk aversion. And maybe we'd see stocks bouncing after the early week decline. And that should be dollar supportive during the American session.
Yeah, so small positive surprise, but after the initial dollar strength, we're seeing.
Yeah, I forgot to mention. You talk about China. Early Thursday, China will release its PMIs for November, and
Right.
that will be a good indicator of where the dollar can keep on falling or not. And of course, we'll wait more on commodity-related currencies, just as the Aussie or the New Zealand dollar.
Yeah, beginning of the month.
Yes, there's a question. Gerard asked if the dollar Japanese yen is going to keep on advancing. There's a good chance indeed that the pair will probably continue, particularly as if we're talking US stocks open with a positive tone and recover the ground lost yesterday. But to be honest, we're heading into payrolls on Friday, and usually the pair tends to keep ranging ahead of the news. There's a good chance, of course, it break, but if it advances, if it keeps on rally, I would think of profiting near these highs. I don't see it breaking higher ahead of payrolls.
Yeah, quote you each time the yen about when the yen chooses a trend, it doesn't stop for a long time. It's very clear.
That's
But
the good thing of dollar Japan. That's the good thing of the dollar Japanese yen. The bad thing is that it spends days and days and days and more days going nowhere. But when it starts to go, you can jump there and go with it.
yeah, it's unstoppable.
Yeah,
Yeah,
no
but
pullbacks, no nothing. Just go.
yeah,
10 years ago, that was not the behavior of the dollar Japanese yen. It was, uh, on contrary, it had a completely different behavior. And that's something once one learns with time in the market, right? That there's a certain behavior, a certain correlation or inverted correlation that takes place into the market, and all of a sudden that changes, right? And here we are. Remember, I don't know, maybe 2 years ago when the Fed was talking about, I'm sorry, the possibility of rising rates, Wall Street plunged, right? And these days, we are talking about the Fed pretty much confirming a December rate hike, and all of the US major indexes trading at record highs, right? So beware of that those kind of correlations or inverted correlations or certain behavior is not forever, right? Market
Yeah,
changes, market evolves. But
indeed.
yes, we're seeing this one rolling further. And it's, as I said, supported by gold prices falling. Both faith havens are under pressure right now. Market's a bit more optimistic today.
Yeah, good mood. Higher, higher growth in the United States is good news. Again, as you mentioned, correlations can change, and at some points in the past we had good news about the US economy, meaning an upcoming rate hike. An upcoming rate hike is not good news for markets.
Yeah,
And then, but at least today, good news is simply good news.
good news. Indeed.
Martín, tenemos que mover el
The
televisor
one not
de acá.
reacting is the pound.
Mira, ¿lo podés seguir?
Sorry for that. The pound is not reacting. It's stuck near the daily high, right in the upper range of the range we discussed earlier, but not following through. Still reluctant to lower strength. Oil prices are plump also. Okay. Since there's not much to add to what we already said, I don't know, you, Yohay, if you want to add something, but if not, let's do it.
Just a few more data points about the GDP.
Okay.
Personal consumption was upgraded to 2.8% instead of 2.3. Final sales more or less the same, 2.7 instead of 2.8. Business investment downgraded to minus 4.8. I'm looking for any really important details. Maybe the investment numbers are not so good, but consumer spending is good. So basically not a big surprise, no.
Okay. That's pretty much your wrap up. Or you want to add something else?
Well, yeah, I mean, the headline numbers came out a bit better than expected, 3.2 instead of 3, which is a small upgrade from 2.9. But remember, these are annualized figures, not such a big surprise. So it's good for the US economy, doesn't change the picture for the Fed into the December meeting. So,
okay, I have to agree with you that it's not a game changer. The fact that they came a bit better than expected, the previous reading, it was not enough surprise to shock the market. As we said at the beginning, the real market mover is the first release that we get a month ago with that good 2.9%. And well, we are still waiting for the final number for the third quarter GDP in the US, which will come in a month. That will give us a clear picture of how the economy moved during the last 3 months, that third quarter of the year. But anyway, as I said earlier, I do believe that the market is looking for an excuse to buy the greenback, and that for the upcoming US session, I will expect stocks to rise and therefore support some risk appetite related trading, particularly because I still see the gold and the yen weak. Okay, still, and with my mind on Friday's payroll, maybe we get a little action ahead of the report, as the market has pretty much priced in the 100% probability of a Fed rate hike next December. We are just 2 weeks away. while at the same time we'll wait for tomorrow's OPEC meeting before compromising more serious positions. So maybe we'll see some range consolidation, but I do believe that the market would still favor the greenback. Okay?
Yep.
Okay.
All right.
Anyway, I do believe that's it for today. Thank you all for being here with us. It's always a pleasure. Thank you, Yohay. And
Valeria.
thank you to Mauricio, who was in the backstage making this work.
My
And
producer.
yeah, our producer, of course. Where would we be without him, right? So anyway, thank you guys for being here and share this time with us. Hope we help you somehow. Sorry, and see you back soon. Okay. See you, Yohay. Nice to be with you as usual. Bye bye.
Ciao. Bye bye.
Okay.